let's start to understand Bitcoin mining profitability. The first thing we need to understand is, why does Bitcoin need to be mined? Essentially, it's an effective way to have a decentralized network. Bitcoin mining is a $1 trillion industry, but so many people, even those who claim to be Bitcoin maxis, don't actually understand the most important thing that gives Bitcoin its value: the mining. People are told things like, Bitcoin is digital gold, Bitcoin is a great store of value, Bitcoin is the answer to your retirement. And to be honest, these points are all true in my opinion. But welcome to Crypto Coach Will, where we bridge the gap for everyday investors wanting to build real wealth in crypto. I'm Will Wright, the founder of Mining Store and Imperial Wealth, two of Australia's leading companies in the crypto space. For over a decade, I've helped everyday investors safely and securely set up in the cryptocurrency market so they can build long-term sustainable wealth. In this podcast, we break down the complexities of the cryptocurrency market, everything from investing, trading, DeFi, and even Bitcoin mining. Let's get into it. If there's no Bitcoin mining, then there is no Bitcoin. Bitcoin mining is a $1 trillion industry, but so many people, even those who claim to be Bitcoin maxis, don't actually understand the most important thing that gives Bitcoin its value: the mining. In this episode, I'm going to break down Bitcoin mining and answer everything that you need to know to confidently understand what it is. Why does Bitcoin need to be mined? What are the Bitcoin miners actually doing? Is Bitcoin mining bad for the environment? And what happens when all 21 million Bitcoin have been mined? By the end of this video, my promise to you is that you're going to have a massive light bulb moment. If you aren't already a Bitcoin maxi, then my challenge is to make you one by the end of this episode. The problem is that people are told things like, Bitcoin is digital gold, Bitcoin is a great store of value, there will only ever be 21 million Bitcoin, or Bitcoin is the answer to your retirement. And to be honest, these points are all true in my opinion. But when it comes to really understanding why those statements are true, most people simply don't know the answers. So, to understand what Bitcoin mining is, you first need to have a basic understanding of what Bitcoin actually is. So what is Bitcoin? There are two elements to Bitcoin: the Bitcoin network and the Bitcoin currency, or commodity. First, let's take a look at the Bitcoin network. It's the infrastructure that allows for digital transactions, similar to a digital banking system, but decentralized. Now, the reason it's decentralized is because it uses blockchain technology. Essentially, blockchain technology is a system, or what we call a network, which is kept alive and honest and also secure by multiple computers, not just one. This is different to, say, the ANZ bank system, which is owned, managed, and controlled by ANZ. This is what we refer to as a centralized system, and it gives way too much power to one central entity. Whereas blockchain networks are not owned by anyone. Thousands of computers around the world keep the blockchain or record of data alive, and anyone can contribute their computer to the network and support it. This is extremely important because it means that not one person or group of people can control the network or the data. And it's the main reason why Bitcoin and other blockchains or cryptocurrencies have been so successful. Before we move on from what blockchain is, I want to let you know that it's called blockchain because essentially each block on the network represents everything that's happened in a certain time frame. And each of those blocks are connected by the chain, so they relate to each other. We will explore this further soon. So, the Bitcoin network is digital. It's a decentralized network, and it's backed by blockchain technology. But where does the second element actually come from? Where does the Bitcoin come from? Now, that's where the concept of Bitcoin mining comes in, the whole purpose of this episode. The Bitcoin network was first created in 2008. At its core, the network is just a software with a specific set of rules or parameters. One of those parameters is that there will only ever be 21 million Bitcoin. Now, when Bitcoin first launched in 2008, all of the 21 million Bitcoin was sitting inside a digital treasury, waiting to be released over time. Another parameter that was set was that each block on the blockchain would be a record of the past 10 minutes of transactions and data on the Bitcoin network. Now, the way that one block is recorded and the next block is formed is through what we call Bitcoin mining. Basically, every 10 minutes, a block is mined, formed, and recorded, and the miner that forms the block is rewarded a small portion of that 21 million Bitcoin. Originally, the reward was 50 Bitcoin. So every 10 minutes, 50 Bitcoin was being rewarded to a miner. But what are the miners actually doing? Bitcoin miners or computers have two main jobs. Firstly, they keep the blockchain up to date, essentially maintaining a record of who owns what Bitcoin and updating that every 10 minutes. Secondly, they keep the Bitcoin network secure. Here's what's happening. Participants on the network are constantly sending and receiving Bitcoin to one another. All of these transactions are piling up into a queue called the mempool. For a transaction to be processed, it needs to be included in the next block. Now, every 10 minutes, a block is created or mined. Think of that new block as a bank vault that's locked. Inside that vault is a reward, which started at 50 Bitcoin. Today, due to the Bitcoin halving, the reward now sits at 3.125 Bitcoin per block. But we'll explore that a little bit more soon. Now back to the bank vault, or the block. It's locked with a cryptographic code, which is why we call it cryptocurrency. All the miners around the world are racing to solve that cryptographic puzzle. When one of them finally solves it, the vault unlocks. But before the miner can take the block reward out of the vault, they must first collect all of the transactions that happen in that 10-minute period, update the ledger so we have an accurate record of who owns what Bitcoin. They then submit that record into the vault, and in return, they get the block reward and all the transaction fees from inside that 10-minute block or vault. Once the vault is closed, it can never be opened again, and each block is connected by the chain, hence the blockchain. That's how the blockchain stays secure and verifiable. You can literally look at the blockchain online and go back to the first block that was ever recorded, or the second block that was ever recorded, or the 100th block that was ever recorded, and see who owned what Bitcoin at that point in time. So why does Bitcoin need to be mined? Essentially, it's an effective way to have a decentralized network. With a centralized network, you can rely on one computer or server to keep everything up to date and verified. But the downside of that is you're putting all of your trust in one entity. With a decentralized network, you're creating an incentive for thousands, if not millions of computers to keep the network alive, verified, and secure, and you're giving them an incentive to do that, which is earned through the reward inside each block they compete for. The miners are happy to compete for these blocks as the reward inside them is substantial. And the users of Bitcoin are happy for the miners to be rewarded because it keeps the network, system, and currency secure and valuable. But how does the network stay secure? Why can't I just connect my own miner and alter the old blocks or steal the rewards? Because today there are billions of dollars of Bitcoin miners all competing to unlock the next block. To control the network, you'd need more than 50% of the total computer power. That amount of computer power doesn't even exist for you to buy, and the cost to acquire it would be astronomical. Even if you did manage it, successfully attacking or altering the blockchain would destroy Bitcoin's value, leaving you with nothing but expensive hardware and no reward. So let's summarize this again, because I know when hearing all of this for the first time, it can be difficult to grasp the concepts, let alone understand why they're all significant. So what we have is a digital network backed by blockchain, which makes it decentralized. Decentralization is important because it takes the power away from one entity and creates a substantially more secure network, which is trustless and no one entity can alter. That summarizes why Bitcoin's network is so powerful and trusted. Then we have Bitcoin, which is so valuable and increasing in value. The main reason for this is we will only ever have 21 million Bitcoin. Miners have to work hard to earn that Bitcoin, which means it's scarce and hard to get your hands on. Hence, it has value. And it's the combination of there only being 21 million Bitcoin and that miners have to work hard to get that Bitcoin, which makes it a long-term store of value. That, as well as being further and further adopted, desired and integrated in society to the point that not just miners want Bitcoin, but investors want it too. That's why Bitcoin is so valuable and a great store of value. Now, ultimately, that should be your first light bulb moment. You should now understand the significance of Bitcoin being decentralized, as well as how it holds its value over time. Now that we have a foundational understanding of the Bitcoin network, Bitcoin mining, and where Bitcoin's value comes from, let's jump into some more nitty-gritties of the Bitcoin mining. First, let's look a bit further at block rewards, the rewards that miners take out of the vaults or the blocks that we explained before. There are two parts to it. The block reward being the reward from Treasury, which was 50 Bitcoin originally, and the transaction reward, which is all of the fees that participants on the network pay to have their Bitcoin moved around. Now, the transaction reward is extremely important. We're going to explore this further soon. But first, let's get our head around this concept of the Bitcoin halving. What is it? Why does it happen? And how does it affect mining returns? So basically what you need to understand about the Bitcoin halving is when Bitcoin first originated, as we said, was a series of parameters that were put together. It's just a software. That's really what it is. And one of the key things about the Bitcoin network and Bitcoin is there will only ever be 21 million Bitcoin. As we've explained, that Bitcoin is being mined every single day. And when Bitcoin first originated, the miners were getting 50 Bitcoin per block. However, understand that Bitcoin's value wasn't at $100,000 when it first originated. It was sitting at cents, if not dollars. So every block they were mining, they were getting $50 or whatever it might be. But also, there were a lot less miners on the network competing for that $50, so you might have won a fair few blocks every day or every month as a Bitcoin miner at the time. Honestly, mathematical genius, what has happened with the Satoshi Nakamoto or the group of people that invented Bitcoin, which by the way is anonymous. But basically what they understood was as the Bitcoin network grew over time, the value of Bitcoin would be going up in value, and therefore miners would not need such a large block reward. If it stayed at 50 Bitcoin per block, then inflation would be too high. We'd run out of the 21 million Bitcoin sitting in Treasury to reward those miners. So what they did is they coded in that every 4 years, the Bitcoin halving would occur. Basically, every 4 years, the miner's reward halves. It started at 50 Bitcoin, then it went down to 25 Bitcoin, 12.5 Bitcoin, 6.25 Bitcoin, and now we're sitting at 3.125 Bitcoin. Basically, what you need to understand is the point that we're at now is Bitcoin's price is at $100,000. So if I am the lucky Bitcoin miner that wins the block, I'm getting $325,000 US dollars approximately, okay? So it's harder to win those blocks though. So what happens is we join mining pools, but that's another concept. Essentially, all I wanted to explain at this point is what the Bitcoin halving is. Hey guys, real quick. If you've been wanting to earn passive Bitcoin without dealing with the headaches of watching the markets, you've got to check out Mining Store. We help investors buy and host Bitcoin miners in our professional grade facilities. No tech skills, no infrastructure costs, just passive Bitcoin straight to your wallet. If you're serious about building long-term crypto wealth, then hit the link below and book in a call with one of our experts. Now let's head back to the episode. So now you understand what the Bitcoin halving is. Again, mathematical genius that it's worked out this way and miners are still supporting the network. Bitcoin's price is still going up every single day. It's honestly one of the best inventions we have ever seen, especially in my lifetime. Let's jump into understanding a little bit more about the actual mining process now. To start mining Bitcoin, basically what you need is a computer. Now, when Bitcoin first came out and when I first started mining Bitcoin 10 odd years ago, we were actually doing this on our desktop computer. You could literally mine Bitcoin on your desktop computer whilst you weren't using it. But as humans do, they see money in something, and so we invent something else that's better at doing it. And that's what ASIC miners are. ASIC miners are still a computer, but all they are capable of is mining Bitcoin. They are literally programmed to mine Bitcoin, and they are bloody good at it. You can't log onto an ASIC computer and start playing your favorite computer game. You can't browse the internet on it, but it sits there and mines you Bitcoin day in, day out. So basically, once you've purchased your ASIC miner, you connect that to the network so it starts solving the blocks. But as we said, there's millions of computers around the world, about $80 billion worth of ASIC miners, all competing for the same 10-minute blocks now. So to be successful at this, you're much better off joining a mining pool. And essentially all that is connecting with many other Bitcoin miners out there so that you have a better chance to win that reward, but you then share it with them. Once your Bitcoin miner is connected to the network, essentially what you're doing is you're paying for the miner and then you're paying for the power bill to keep it running. In return, you get to keep all of the Bitcoin that it mines from each block on the network. Now, you can buy that Bitcoin miner, have it sent to your home, plug it into the wall, and start mining Bitcoin. However, your power rate, and particularly in Australia, it is very high. You're paying anywhere between 30 to 40 kilowatts per hour. For us, we have massive hosting facilities set up overseas, and we're getting power rates at around 13 cents per kilowatt hour. So most of our clients will choose to have their Bitcoin miner sent to our facility and hosted for them. That takes me to Mining Store, the company that I actually founded, which now hosts over $60 million worth of Bitcoin miners for our clients. It gives them access to cheap power and consistent uptime. On that note, there's so much to know about Bitcoin mining, and hopefully this episode covers a lot of it. However, the best thing that you can possibly do is speak to one of our experts. So in the description below, if you click on the link, you can actually book in a call with one of our experts, and they'll explain everything in more detail. Now, the final point that I do want to cover, after mentioning that you buy a Bitcoin miner, you connect it to the network, you may choose to host it yourself or have it hosted by us, and in return, you keep all the Bitcoin mined, is you want to have a good understanding of what entity you're going to run this investment under. Most of our clients will start on a personal level. Maybe they'll buy one Bitcoin miner, get it online, get a feel for the investment. It is something new at the end of the day. However, when they choose to expand their operation and scale things to a $50,000, $100,000, $200,000 operation, a lot of people tend to start using a self-managed super fund, or they'll set up an entire business for Bitcoin mining. Of course, you should speak to an accountant to see what works for you, and one of our experts can connect you with an accountant if that's what you want to do. So now let's start to understand Bitcoin mining profitability. The first thing we need to understand is the details of the hardware that you're purchasing. The main brand of hardware that Mining Store tends to purchase is the Bitmain hardware. At the moment, the current model of Bitmain hardware that we're purchasing is the S21XB 270 terahash miner. Basically, the hash rate of that miner, 270 terahashes, is the power that it can generate. Think of it in terms of a laborer. If you've got 10 laborers building a house, they're going to do better than one. So the 270 is how much output the miner can achieve. The second thing that you want to understand when it comes to miners is the power draw. Of course, to keep this machine running, you have to pay a power bill, and how much power that machine is drawing is going to make your bill more expensive. This is measured in watts. Electricians will, of course, understand what this is. Maybe people who pay attention to their power bills will understand what this is. But 3,800 watts is how much this model of miner that we're talking about draws. The final component to understand is, what is your power rate? I mentioned in Australia, a lot of people pay 30 to 40 cents per kilowatt hour. So basically, you would multiply the 3,800 watts by your power rate to get your final bill. And per month, it tends to be around $200-$300
depending on what the power rate is. That would be our hosting facility with 13 kilowatt hours. Now, we covered off the Bitmain miner brand. Other miner brands that exist are Watts Miners and Canaan. However, we like Bitmain. We see them as the most premium and they have the least issues to worry about. So we tend to get our miners into the Bitmain model. So that's the hardware. That's how you're earning the Bitcoin. But what else affects a Bitcoin miner's profit? The network difficulty is an important thing to understand. How much competition is there out there? Basically, network difficulty is, as I mentioned on the miner model before, you have 270 terahashes. The network difficulty goes up the more miners that start competing for Bitcoin blocks. The second part, which we explained before, is the block reward. Remember, that is the amount sitting in the vault that comes from Treasury, as well as the transaction fees from all the blocks transactions. Finally, and there's, of course, like anything, other factors that affect profitability, but the main other factor is Bitcoin's price. The higher the price of Bitcoin, the higher the revenue that you've received from Bitcoin mining is. But it also majorly depends on when you sell that Bitcoin. Now, a major thing that people ask when it comes to Bitcoin mining is, I saw that Bitcoin miners started at 10 terahashes back in 2015, 2017, and now they're up to 270 terahashes. So isn't the rate of improvement going, if I buy a Bitcoin miner today, is it going to be 1,000 terahashes by next year? And the honest answer is we're actually seeing a major plateau of mining efficiency. In order to get more terahashes out of the hardware that we've got, the power rate's going up, so it's not really making it more efficient. So to put this in layman's terms, think about the Apple iPhone. Although they're doing a brilliant job of marketing and making us believe that we're getting a massive upgrade when we go from Apple iPhone 15 to 16 or whatever the bloody hell we're up to, there really isn't that much upgrade in the hardware capability. And that's because chips are really being pushed to their limits at the moment. So to answer the main question there, should you be worried if you buy a 270 terahash miner that next month a 300 terahash miner or a 400 terahash miner is going to come out? In my opinion, no. And you can be safe buying into miners without too much upgrade. Now, another big question that always gets thrown around the mainstream media headline news is Bitcoin mining bad for the environment? Now, let's address the elephant in the room. In 2021, Elon Musk famously bought $1.5 billion of Bitcoin and announced Tesla cars could be bought with it. 3 months later, he reversed that decision, citing environmental concerns, saying Tesla would reinstate Bitcoin payments once 50% of mining came from renewable energy. Since then, the Bitcoin Mining Council, led by Michael Saylor, the GOAT, and major mining companies has improved transparency around energy use. Back in 2021, only about 25% of Bitcoin mining was powered by renewables. Today, it's very close to 50%, some still saying that it's over 50%. Hopefully, we see Tesla reinstate their promise soon. The truth is, miners want the cheapest power possible, and today, nuclear and renewable sources are among the cheapest. So there's a massive ongoing shift towards renewable Bitcoin mining, which is incredible to see. Who would have thought that a digital store of value like Bitcoin, launched in 2008, would one day be secured by clean, renewable energy? Bitcoin isn't just a currency. It's a living, breathing network that rewards the people that keep it alive. Miners verify every transaction, secure the blockchain, and unlock the remaining Bitcoin sitting in those digital vaults, all while driving innovation in renewable energy and infrastructure around the world. If you've made it this far, then you now understand Bitcoin and Bitcoin mining at a level that most investors will never reach. Hopefully, this new knowledge has opened your eyes to just how incredible the Bitcoin network is, and how valuable Bitcoin as a store of value asset is. If you weren't a Bitcoin maxi before, maybe you are now. Leave a comment below if you have any questions at all. Now, if you want to understand Bitcoin mining profitability in much greater detail, I actually put a full episode together where I jump on a screen and show you exactly how Bitcoin mining works and we look at a model of how a Bitcoin miner performed over the past 5 years. Thanks for tuning in, and if you found this helpful, share it with someone who still thinks that Bitcoin comes from thin air. Trust me, it doesn't. It comes from mining, the heartbeat of the Bitcoin network. Thanks for tuning in to Crypto Coach Will. If you got value from today's episode, then make sure to subscribe so you never miss the latest tips to navigate the crypto market. If you're ready to take crypto investing to the next level, check out the links below where you can book in a call with my team of experts. We place strong emphasis on educating before investing in the market, so take advantage of the knowledge they have to share. Don't forget to follow us on socials @CryptoCoachWill, and I'll catch you in the next episode.